Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I know each day that I talk about this, I always talk about the mathematics of the market, whether it's gold, euro, treasury bonds, or whatever. These numbers are nothing more than put in computers, and these folks that use these numbers are pretty good at using them. There's nothing mysterious about them at all. This is a 4-month chart of the gold market that we were looking at yesterday when it was trading at a new all-time high of 29.32 when we were on the air. We put this chart up and we showed that there was a 1.618 expansion up here at 29.62. The high overnight was 29.6820. It was there for just a heartbeat. Now, the reason why I'm bringing this to your attention, this was around 2 o'clock in the morning my time. I got a call from the Isle of Man with John Jameson, and he said, you've got to take a look at the gold up in here. And I said, okay, John, what am I looking at? John says, well, we've got a few things that might be very, very interesting here looking at the gold market. And I said, what would they be? And so he sent me this chart. He said, look at this. He said, we're setting right at 1 standard deviation on the daily chart, okay? This is 1 standard deviation on the weekly. You had 2 of those right here. This is a very strong probability that this is going to be a move. Now, what was really interesting here is this happened to be a 50% retracement here. No ABCD right in here. There was a 382 right here that worked out extremely well. But what is exciting is, remember, I got this real early in the morning. I mean, he was just showing me, what was happening. This was at the end of the day. I had this part. I didn't have this part until early this morning. He sent me the whole thing. But you can see we went from 1 standard deviation high to 1 standard deviation low. And if you look, we went from 29.68 to 29.07. That's exactly 2 harmonic numbers. Harmonic number in the gold is between $16 and $18, so 2 times that takes you down $62, and that's what's happened. And of course, the rally back, we've been bouncing off the 382 to 50% most of the day. These numbers, folks, they're used in the S&P. I've showed you that last week when we had the Federal Reserve in there, how they bounced off these numbers. These numbers are in the computer systems for these people that trade funds big time, and they don't tell you what they are, but they have to be there. The reason why is I'm looking at them, and a few other people are too. Do I make money all the time? No, I don't make money all the time, but when I line things up and have patience, yeah, I can do pretty well. But that's what you're really watching when you're looking at this. Now, this was coming in at a 1.618 expansion. That's where all the green lights were going on for me. I mentioned, you got to be really careful up in here. I didn't realize it was 1 standard deviation until John pointed it out to me. We were here when he alerted to me where we were. You can see that there was about 1 o'clock in the morning. All right. So anyway, that's what we're paying attention to. All right, we're going to move over. Our guest today will be Stan Harley. Let's get to the things that mean most to you. Oh, I have to show you what happened intraday. This is when the top occurred. There you can see the hour right there. That's 2100 New York time. That's 11 o'clock at night. That's when it hit. Then we came down. The market rallied up right up to the 50%. Hit it there and hit it again, and then it started down and down and down. Here's where it went to, folks. There's the 1.618 expansion, all right? And that was, guess what? 1 standard deviation from the top and 2 harmonic numbers down, and from there we rallied right up to here. So there's a really good chance that we made a high in that gold market for quite some time. For a long time, That I can't tell you. The fact that it broke $60, that tells you that something happened. That's about all. All right, let's look at some of the positions that we've been watching for quite some time. Now, we had a grain report today, and the grain report was pretty, it was bounced around quite a bit. All we did, first of all, one of our positions that we had was in the soybean meal. And if you remember yesterday, when we were on the board, I said, make sure you put your stop above 304. That would lock in $1,000. And now, see, there was the 382, so 304 would have been the stop. And you can see it's still going down, and it's going to be really close to getting to our larger objective here, because now we've broken through the 786 and we're heading down, which still tells us we're moving to the downside, okay? The other one that we mentioned out, which we thought would be the trade of the day, the trade of the week, and everything, is the Treasury bond trade. We'll get this up here on the daily and remind ourselves that this is when the Fed came in, with a big meeting here back on the 7th. And you can see that was a 382 off of the high way back here. And it was exactly 61% 382 of that, and exactly 61% retracement of that. And you can see it's coming down. And what we did mention, and that is several times, is watch for the 382 retracement. Now there it is right there. You can, just clean all this out so you can all see it there. There was your 382. There was your high right there. You pull it down. There was your 382, came in right there. Went right to the one tick above it. And look, it's been coming down, down, down. And that's now, look at this. This has got well over $1,100 profit in it with a $300 potential risk. That's the ideal situation of what you're looking at. Now, today was one of those days that you really, from my perspective, it was, because I'll just bring this to your attention here. I did this because it was what I call a near perfect day, which doesn't happen very often, but it did happen today. These were the things that I was watching this morning. I'll show. I talked about it on the video last night of selling the crude oil up here at 73.53. Also, you can see the bottom that we had in gold, and then we had an S&P move that took us all the way up to 60.87, and then we had natural gas move up quite a bit, and we bought it down here at 47, and it got up to 57. So these are the kind of trades I'm going to be doing Friday when we do the live trading section. I am going to start putting the AI program in there. I don't do it very often, but I'm having a request to do it. And you can do these yourself, folks. You don't have to be very hard. These little boxes that you see in here, these are things that, are related to the time. If you go back to see what happened 2 days in the past, you'll see these were key times of T days in the past. That's what these things are doing. Okay. The other things that the numbers that we talked about, those standard deviations, those are covered in the Floor Trader's Handbook. So that's all I'm trying to do, is to line all that stuff up together so that you can see how it's all fitting out. Okay. Now, if you look at this on the hourly chart, you're going to see that you're going to come into a really nice ABCD down here, right at a 1.618 expansion right here. Look, we're only 20 pips away. Let's take a little break.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is one of the videos that I sent out this morning, and you'll notice here that we've had a 61% retracement of the high that we made back here in early February. This was also a 382 high way back here, so that was very important. But look at this, folks. This has had a really good run here. For the last 3 days, we've jumped $3 a barrel. That's $3,000. This is telling you the market is looking pretty good. Now, we sold it here at 73.38, and it came down to 72.84. Now, we were only risking 50 pips on this, so when you make 50 pips, you got to book some of it, and that's what we were looking to do. If we blew up this a little bit higher, you'll see each time this market's been going higher. And remember, Mike Moore will be our guest tomorrow. You'll see it just misses this 382 right here, and then of course it misses the next one right here. This morning was just, I believe, just absolutely spot on, because that's where the profit objective was, right here. Okay, now this is a really strong market. One of the things in the newsletter that I covered was this complex of the energy is starting to go higher. It doesn't make any difference who's elected and whether they're going to pump this or that. There's nothing to do with it. I'm just looking at charts, sum total of all the buying and selling. Okay. Now, one that's been leading the pack has been the gasoline. Now, what we're going to do is we're going to take Mike Moore will cover this tomorrow, but I like to take some of his thunder away today, because he's the one that is always talking about this. What we're going to do now is just get an hourly chart here on the gasoline, and you can see El Fuego. There it is, folks. This would be the one to buy. Much, much better. Look how much higher it's gone. We jumped 12 cents a gallon here, folks, and we're still going higher. This is today's action. Early in the night, early in the morning. Let's just check and see if that was anything that was important. You go up, you mark it right here, and there's your 382. Bada bing, bada boom, bada bing, bada boom, and look at that. That's 5 cents. That's $2,000, folks, with virtually very little risk. You can see the ABCDs. Excuse me. You can see the ABCDs as we go higher, and that's another question that people are always asking me. Why don't ABCDs work all the time? Well, if I told you that, I'd kill you, because I don't know the answer myself. All I know is what Mandelbrot said. These are the seeds that make these things move the way they do. If you look for them, they're going to jump out at you, and that's what I'm trying to do each day, is to look at these, and that's what I'm looking at. All right, now let's move that out of the way here. And we had the grain report, of course, that came out here. We'll do soybeans here first. soybeans had the report was relatively friendly. Didn't do very much. It went right up to the 382 right here at 57, and here we're down, another 15. How much is that? We're down about 14 cents. It looks like we're hitting a lot lower. The one that was really interesting from a short-term perspective here was the soybean oil. You can see it just exploded, and it went all the way up to here. And guess what that is, boys and girls? You can see that real easy. There's your A, there's your B, there's your C, there's your D, and it's in a selling mode. So if you're interested, there's something you might want to consider. I'm not giving that as a recommendation, but I'm just telling you that's what's happening with this. Also, I wanted to mention the natural gas because, that's a really good thing for trading. The margin's only like 2,800 and it moves 50% of margin almost every day. You don't see that in any of the other things, but look at this today, folks. This was the early morning buy was right here. You can see there it's early in the morning. Of course, here's where we bought it right here when it pulled back to that level right there. That was right around 8 o'clock. Well, that's when I bought it. Anyway, you can see here from that high to that low, it was just a little below the 382 by $1. Well, that's pretty much on, and it went right up to your target 1.618, and that was a really nice one to work at. Now you can see we're starting to consolidate, looking like we're getting ready to move to the downside on this. All right. Okay. Now the next one we want to take a look at. We've got to be ready for it, folks, because this is going to be a whiz bang. I think it is, if it ever happens, and it looks like it's getting ready to. And this is our live cattle. This is the one from yesterday. Remember, there was your 382 from yesterday. Here's what we're looking at here today. This is where we're going, folks, right down in here. We'll do that on the daily a little bit. Remember this number here, 192, because we've talked about it day after day. What I'm going to do now is I'm just going to look at this today. You can see how quiet it is. This is 5 hours, and it doesn't even move. Basically, it moves about a penny. I don't even think it does anything. Let's just blow it up to see if that happened to be a 382 that hit there at that point. It certainly doesn't look like it. But by golly, look at that. It's pretty much spot on. But let's look at it where it's going to go. This would be a really good trade setup, folks, if it works. So, well, that's always the case, isn't it? Here's the daily, all right? That's the number. You see that number we're looking at there, 194, where you get back to the hourly chart. And there's where you're heading down here, folks, right down here to this cluster of these numbers right in here. Okay, that's my guess, right in here between 192, 192. That's down 3 cents from where we are right now, and that's nothing. Look at this. There's the first move down right here. You just clone that. That's your second move. There's your third move. What's hard about that? I mean, that you think those boys in computers don't know what these numbers are? So this is where you can see this when it makes new lows. That's when it makes me alert that we're heading down to this zone, because that's going to be a really big. Now, remember, we're coming down for 3 weeks, folks. That's the first time this cattle market's had a big correction, and it has been very strong. And look where it's going to go to right here, right that spot right there. You're going to have a 382. And a 50% retracement, 50% off the bottom down in here. 382 off the bottom, and it comes 618 right in here, right here. The 618 off of this low, and the 382 of the bottom, which was way, way, way back in here. It's going to come in right there. This is your first really good correction, 10 days in a long time in a bullish market. You don't got to be a registered scientist to figure that out, do you? I don't think so. Anyway, we got Stan Harley coming up, always interesting. A lot of things were happening today that probably can't go into. Let me see. That's pretty much it that I wanted to cover. I covered the wheat market. Wheat went right back to the old high. And remember yesterday I suggested covering it at 78. Look what it did. It went right back up there again today. You can see that's a 2 minute. Let's just get up here on the 13 minute. There's where we were yesterday. I said it looks like we should cover it. Went right up to our original sell right here, and here it's starting to come down again. That was because there was a world supply-demand report today at 10 o'clock. Let me see. No, it was at 10 o'clock my time, 12 o'clock Eastern. Anyway, Stan Harley will be our guest. Also, we had a big move here in the euro, folks. It actually took out the Gartley pattern. This is one that did not work because it went above where we thought it was going to go at 30.40. It went up and had a 30 pip stop, and as you can see, it's still going higher. So this one was set to go, looked like it was going to be good, but nope, that didn't work. So you're out of that, and you're waiting to see what the next one's going to be. We'll double check this to see if it made a big ABCD from the exact low to the exact high. And there it is right there. All right. Hey, we'll be back with Stan Harley. Harley Stock Market Lab.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Okay, folks, Stan's a little busy this morning, so I'm going to continue on with the crop report. Plus, I've got some things to go over as far as stocks that people have asked me to take a look at. All right, now you can see the report came out here. This was early morning. Of course, the report was right here. The market originally went up here, and then you can see it's given it all back. So it tells the report looked like it was friendly, but in fact it wasn't. If we take a look, we've already looked at the soybeans. What we want to do now is we want to look at the wheat. Now we've already looked at the wheat, so we've looked at soybean meal, and I want to make sure I don't miss anything. We've looked at the corn, beans, meal, oil. We've looked at all of those, so that's good. All right, let's get back to the stocks. Tesla, a big interesting one. We've showed it many times, but we're going to do it again because we have a lot of stock folks here, and as you can see, it's breaking down big time, folks. So this is that you can see here. We had the big move right here, and look, this is 60 minutes. Let's go to the daily because I recall we had something really big down there. Let's get this up here. I think we're real close to there. We are. Got the big ABCD here. Hold on a second. We're almost at the 61% retracement, folks, here on the daily. Now, here's the move down. Let's just draw it in so we can see it. Remember, folks, this was an important 382. Remember that? And then, look, there's our AB leg right here. There's our CD leg coming in right here. Look, folks, we are $4 away here in the Tesla. Okay, that's the big one right here. Now, there was your 382 here. We had a little 382. Remember on these smaller ones, we pointed those out to you? Oh, you can't see the charts. Michelle, thank you very much, dear. Let me get, that's my fault, folks. You can't let an Italian, just get up here. Okay, let me try it again here, and we'll get up here. There's what I need to see. Get that and hit this. All right. Okay. All right. There's a chart right here. All right. Now, there's where we are with Tesla right in here. Now, we've been following it just about every day. Now, all we're going to do now is just to remind our friends that these are the things that we were watching, those 382 ratios, these smaller. Look at this. You have an ABCD here. You only rally $15, and then down, down, down she comes. Look what happened when we went down through the 382 here this morning. We broke through the 1.618. That told you that we're getting ready to go a little bit lower. So that's what we're paying close attention to. Folks, that Apple chart that I pointed out just a little while ago, that is not a good chart. But just look at that again, because that's about as bearish as you can possibly get. Hold on one second here. We'll get it back up here to look at it. This is the most bearish that you can possibly get here on Apple. Let's just get it up here. You're going to see it out of the way here. Now, this is the hourly chart. Okay, now this is the hourly chart. You can see the A, B, C, D forming right here. Okay, let's go to take a look. There's your AB leg right there. There's your CD leg coming in right there. There's your high right here. Converting this over to a daily chart, what do you have? Move it over. You got a market that's coming down, and it's making a 1, 2, 3, 4-day rally at the 382. Whew, boy, that's bearish. Anyway, you look at that. What does that mean? It tells us that we're probably going to be seeing very, very shortly a move here on Apple, at least down to the 212 area right here, 212, 213, the 1.618 expansion. So that's what it looks like on that score. All righty. All right, now let's move this out of the way here. And I got a note of everything. I've already covered that. Somebody's calling me at the home office. Just a second here, folks. And, we've got our Mr. Main Man is in the house. Mr. Harley is with us today. How are you, my friend?
I'm doing just awesome, Larry.
That's what I like to hear. Tell us what you're seeing, my friend. We've been waiting for you, so give us your best shot.
Absolutely. I had a little camera problems on my other computer here, so I had to switch real fast.
Welcome to the club.
That happened before.
Oh, just twice a day.
Well, let's flip through some charts here, and I think this might be instructive as far as what's going on here. In keeping with my theme, as you know, I think we're making a significant market high. And I'm going to go through some charts again. Some of these are some that I've shown in the past, but I think they're important nonetheless. And then I have some new stuff as well. And if we have time, we're going to get through stocks and Case-Shiller Index and Bitcoin. This one is one that I've shown on a number of occasions. This is a chart of the Dow Industrials going back 50 years. And it's picked out all the major highs, beginning from the December 1974 low. There's a cycle here that's about 150 months. And it, as you can see, and I won't go through all the dates, but it lines up neatly with December 2024. And so far, the Dow Jones Industrials peaked in December 2024. There's the regression analysis of those dates. And it was forecasting a high in December. And so far, that's what we're seeing. When I input the monthly data for the S&P 500 into the analyzer program of the Foundation for the Study of Cycles, it determines the dominant cycle is 41 months. And that cycle has been around a long time. Edward Dewey wrote about it in his book. He was the founder of the Foundation for the Study of Cycles. And back many, many moons ago, he wrote about this cycle, and it was dominant then. It's dominant even today. So we have on the monthly charts, we have two dominant cycles right now that are the operative functions. The first one is the 150 month that I showed in the prior slide, and this one, the 40 month. And both of those are clustering right now for a high.
Okay.
Roll this down to the weekly data. This is a repeat of what I've shown in the past with a little bit of a modification. I'm a big fan, as you know, of the Lucas number series. And what I find is the tops in the stock market can be calculated by looking at the Lucas numbers and either their ×2 multiple or their 1/2 multiple, either one. And every single high of importance projected from the March 2000 high has been denoted by the Lucas number series. And as you can see, the latest peak that we saw in January, just a couple of weeks ago, was just a couple of weeks shy of being exactly 161 weeks, which is, as you can see from my table over here, 1/2 of the Lucas number 322.
Yep.
When I input all the weekly data into a spreadsheet and I do a calculation of what I call price velocity, basically that's a look back. Some people call that assessment momentum. Some people call it rate of change. I'm an aerospace engineer by training, so I use the term price velocity.
Oh, gotta pay a few bills, my friend. Sorry, it's all part, just like the Super Bowl, buddy. And you are the halftime show. Gotta be better than one we saw Sunday or yesterday. Because boy, Monday, whatever the day it was terrible. All right, let's move on. We'll be right back. Stan Harley coming up next.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. Speaking with Stan Harley, Harley Stock Market Letter. Please continue, Al. Stan? I've been up all night trading gold, so don't believe anything I say. You shouldn't do that anyway, but anyway, that's what's going on. Please tell us what you're looking at, my friend.
Yeah, I'm looking out the window here in Northern Virginia in my house, and there's this funny white stuff falling from the sky.
Yeah, it's called snow.
You wouldn't understand that in Tucson, Arizona, would you?
You know, we actually do get snow here about 2 or 3 times a year, but now we're into, getting close to middle of February when our spring starts coming. So we do get blizzards and stuff because, I'm in the mountains. I'm at 3,000 feet. So we do get that. In fact, just the other day we had snow in the mountains, but not very often.
Back to the markets, the subject we all love. What I've done here is I've inputted the data into the spreadsheet to calculate price velocity, and very interesting here. The S&P 500 has moved up higher and higher, but take a look at the dots. They're making progressively lower and lower peaks. And then look at the data point that coincided with the January 24th top. I mean, it's literally right on the floor here. So what does that mean? It means as the market has moved higher, progressively higher, it is running out of juice. It's running out of rocket fuel. It's getting tired. And with these divergences here, it contributes to my view that we could be making a top here. Let's take a look at the daily data. Here's a cycle that I've talked with you on the air a lot about. It's 80 trading days. It seems to be the dominant cycle on the daily chart. And it's not a fixed beat time clock. Cycles expand, they contract, they move around a little bit, and that's just the way it is in life. But once you understand that, take a look at this. This goes back to 2021. And most of the time, it's been right around 80 trading days. A couple of times it skipped a beat, so it went to about 160 trading days. And then on its most recent recurrence, it appears to have expanded by a Fibonacci 1.618. So what I've done in the spreadsheet at the bottom is I put in all those high dates and did the calculation, and it was forecasting the next recurrence around January 23rd, 2025, with a standard deviation of 3 trading days. And as you know, the high so far occurred on January 24th, certainly within that window of time. I look at the big 5 indices. And for me, the big 5 are the Dow Jones Industrials, the Dow Jones Transports, the S&P 500, the NASDAQ Composite, and the New York Composite. And why do I look at them? Well, I want to look at them for their interplay among each of them, and I want to look for either confirmations or non-confirmations. And typically at major pivotal turns, like for example, when we're looking for a top, early on in advance, I want to see all 5 of those components make all-time highs. But as the advance matures, you start seeing 1 or more components among the big 5 start falling off the new high club listing. That's exactly what happened. Back on November the 25th, we saw the transports peak out. November 29th, we saw the New York Composite and its companion advanced decline line top out. December the 4th, we saw the Dow Industrials peak out. December 16th, we saw the NASDAQ top out. January 24th, we saw the S&P 500 cash index. And then on January 31st, we saw the Dow Jones futures contract just eke out a token new high. And so far, that's been it. That is typical how tops are made. Is the high end? Well, I think so, but having said that, there's always, on the other hand, to consider. This is the United Kingdom FTSE 100 index I ran off just moments ago. And this, as well as the German DAX, are making new all-time highs as we speak. And typically over the long haul, certainly the British market and the American markets tend to march hand in hand. More often than not, the British market tends to lead the American market. Not always, but the majority of the time it does. So my one fly in the ointment is the British market is making a new all-time high, and yet the American markets appear to be lagging. Yeah. So if this is telling us something about maybe there's some flaw in my topping scenario, well, here it is. Well, on the other hand, we have a very interesting Fibonacci relationship defining the highs in 2007, 2018, and the present. They are separated by a pristine 0.618 Fibonacci relationship, lining up right with the present. So on the other hand, could mean the FTSE is topping right here and right now as we speak. We shall see.
Yeah. Stan, I don't know if you know this, but the FTSE, the London Stock Exchange, very, very few of those are UK companies. They're all foreign companies that are domiciled in the stock exchange in London. I've never traded it. Tom Hugard tells me what's involved in it, but that's mostly foreign companies that are domiciled on this exchange in the UK. I have to go by what he said, but he's pretty smart, so that might be why it looks a little different, because it's a combination of many, many different companies all over the world.
I was unaware of that. I have also looked at the ACWX, the All Country World Index, and it topped in September of last year. So even though the UK market and the German market are making new highs, the ACWX is not. So that could be yet one more divergence to file away in our memory banks. Interesting. Let's look at something altogether different. Certainly a topic that a lot of Americans are interested in, and that is the Case-Shiller Home Price Index. There are a number of Case-Shiller indices. I focus primarily on the national index, and I input the data in a spreadsheet, and I do the same analysis on this that I do on the stock market and the other markets that I track. There's about a 2-month lag in the data series, and it appears to have very certainly preliminary indications are it peaked in July of this past year, and it's starting to curl over. What I've done here is I've plotted the monthly data, the monthly price bars in blue, and then I have also included an 18-month moving average in red. A very simple buy-sell signal is rendered when the monthly price bars cross either above or below that 18-month moving average. As you can see back here, where my mouse cursor is, the crossing above rendered a buy signal in home prices. And then in late in 2006, we saw the monthly price bars cross below the 18-month moving average. So you would have been selling your home, or certainly not a buyer of home prices until when? Early 2012, when the monthly price bars crossed back above the 18-month MA. And we're still on a buy signal, We kissed it right here about a year and a half ago, but did not break below it. But now prices are starting to curl over, and a number of indicators I track, price velocity, cycles, and other indicators. Whoops, here comes the music.
Hey, stay with us. We got another 2 minutes of Stan Harley coming up, folks. You got to pay the pauper, and we'll be right back. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
And Harley, please continue, my friend.
All right, Larry. Let's continue our drill down into the Case-Shiller Index. What I've done in this chart is I have inputted the data into the Foundation for the Study of Cycles scanner, and it determines the dominant cycle to be 103 months. And as you can see here on the price graph with the cycle overlay, it does a really, really nice job of plucking out that cycle. And my box seems to have moved around a little bit, but you can see very clearly 103 months is the dominant cycle, and it appears to be peaking just as we speak.
Wow. Now you had Bitcoin up there. You had people would like to know, so let's fire away.
A bit of time, and so until we will press on here with Bitcoin, this is a log chart going back to the very first day of trading in Bitcoin in the summer of 2010. And there's a couple of things that stand out on this. This is a log chart, of course. An arithmetic chart would be too hard to read because it's moved up so much. But two things stand out. Number one, the major cycle tops can be defined by the Lucas number series. So you can see I've put in brackets the Lucas numbers 29 and 47. These are monthly counts, by the way. And notice the time spacing between the important highs. 29 months over there to the left, and of course Lucas number 29. The next high to high count was 49 months, which is just within 2 months of being Lucas 47. The most recent count between highs was exactly a Lucas 47 months, and I'm theorizing that the next high will occur at about 47 months from the November 2021.
Thanks for joining us, buddy. See you later. Stan Harley, folks. We'll see you tomorrow. Mike Moore will be our guest. Thanks again, Stan.